Okay, so we talked about the things that we can get involved in. What should we avoid? Now, I'd just like to say there is no right or wrong way to trade. I know traders who have made a lot of money becoming specialists in one specific niche. Just I know traders who have made a lot of money becoming traders in something that most people are trading, the most popular thing. So it is all personal preference. However, I would recommend personally, if you're a beginner or an intermediate, you stick with the bigger markets and avoid these kind of things here. So the first thing to avoid is just to watch the spread relative to the daily range of the market. So what do I mean by that? So if your spread, and we've talked about, we know what the spread is 10 points, but the market in a day only moves in a 50-point range, so from low to high the average move is 50 points and your spread is 10 points, that's going to make your life very difficult as a day trader. If you've got to pay 10-point spread straight away and in the whole day the market only moves 50, you are really going to struggle to make money as a day trader. So watch out for that, avoid that. That's a unique thing, but on some of the smaller indices that can be a problem. So don't think, oh, I found a little country somewhere that has got an indice that I want to trade, but that's fine. But just look at the spread and then compare it to the daily range. We're going to look at some charts in a second and how you can read that, but that's very important. Number two, small cap shares or stocks. Now, not all brokers offer these, but if they do, be very careful because liquidity can be low at certain times, and especially if they're moving actively, you might find the spread goes really, really wide and you can't get in and out of your position, and that makes them very difficult to trade. So avoid those if you're a beginner or an intermediate. And say the lesser known exotic currency pairs have larger spreads, as do some indices, as I just said. Some of the obscure, smaller countries, those pairs are going to have a big spread and they're going to be variable spread as well. So you've got to watch out for that in terms of as the market opens or closes, that spread's going to widen or narrow, again making it very difficult for you. And if you're not familiar with it, that's when you can get caught out. Being important to manage your risk. So stick with the majors across all the asset classes. There's loads, there's more than enough there. You've got your biggest continents, just stick with those. Everything in the US, everything in the UK, Europe, etc. And Japan, all those things, plenty of liquidity there, loads to choose from, whichever type of trader you want to become. There's enough choice there to get involved with that.